Hello everyone, I am here to talk about an interesting opportunity from investors' perspective. Empirically, if there is one factor that capital markets have shown maximum tendency to emulate into return, it is the growth trajectory of the underlying business or the index. Case in point, Nifty 50 has given a TRI return of 15% CAGR backed by 13.5% CAGR of earning growth over past 2 decades. With that knowledge, what if you get an exposure to a segment that has grown at 1.7 times of the nominal GDP growth during last 5 years and projected to grow almost 1.5x the nominal GDP growth in foreseeable future? Wouldn't that be an opportunity to latch onto? If your response is yes, we would like to bring forth evolving landscape of exports from India's perspective. In hindsight, a lot has happened since 1991, the year of economic liberalization, that laid down foundation of India's opening up for global trade and easing restriction as trade partner. As you can see, export can be seen as an important contributor to nation's economic growth and eventually leading to higher per capita income. Invariably, both these factors, the export growth and the economic growth of exporting country, have strong correlation. Hence, they can be seen as complementary nodes to achieve desired economic outcome. Let me touch upon few aspects of export sector and its nuances. First, export helps in earning forex reserve. They are used to discharge country's external obligation and hence bring stability to the underlying currency. Second, India has almost 4.3% share in global export services, making it the 7th largest service exporter in the world. Parallelly, India has 1.8% share in global merchandise export, making it the 17th largest merchandise exporter in the world. As a point to ponder on, India is the largest importer of defense goods world over with similar to 10% market share of global defense imports. India's export base in year 2023 was $783 billion, which is touted to clock scale of $2 trillion by 2030 as per Government of India's projection. That translates into almost 15% CAGR. Few factors which can assist in achieving these goals are: number 1, geopolitics and the supply chain diversification have put India in a sweet spot, especially post-COVID. Indian workforce arbitrage, which was so far focused on lower cost of delivery, has been tapping into higher skill set opportunity and hence opening new vistas of growth. Third, government policies, reforms and incentives have acted as an enabler for conducive environment. These regulatory frameworks are investing today in creating champions of tomorrow. Incremental efforts by government to sign trade pacts and treaties can go a long way in opening newer markets and creating level playing field for Indian corporates. Last but not the least, global economic projections by third-party agencies are looking at some stability in global economic outlook after a consistent downtrend post-COVID, especially for developed nations. This stability can be an opportunity to seize before recovery starts to play out. Let's discuss an interesting case study of Indian electronics and semiconductors. India's electronic production stood at $101 billion in FY23, contributing only 3% to GDP, while the same number for other ASEAN peers ranging between 17 to 18%. A push factor from government via schemes like PLI, a focus on reducing import dependence on China, and a significant domestic consumption market provides the right macro environment for strong ramp up of electronic production over a longer period of time. Namely here, capex commitment of $20 billion over next 5 to 6 years provides that impetus. Fund will look to invest in businesses that have more than 20% exposure to revenues outside India. This will primarily create opportunity set of almost 300 names, which will have exposure across wide variety of sectors. Second, fund will be constructed on ethos of a multi-cap fund, where a fund will like to maintain judicious balance and exposure across market capitalization bucket of large, mid and small. Third, fund will look to create opportunity by looking at primarily three buckets of business evolution. The first one we call as zoomers, where business are in early stage of global exposure, either due to their own size or the infancy of the industry they belong to. The second bucket we call as millennials, where business which have made global presence felt and right now reaping benefit of gaining market share incrementally. The third bucket is Gen X, where businesses have attained global scale and size. These businesses are incrementally gaining relevance among clients backed by either operational efficiency, hence helping cost takeout, or doing more for less, thus helping transition for the client. Reasons to invest in HSBC India Export Opportunity Fund. First, if we look at businesses with more than $250 million market capitalization that meets the minimum threshold of 20% plus revenue coming outside India, we are looking at a wider universe of more than 300 names. Second, not only this extensive universe offers scope for creating well-diversified portfolio with wider participation from numerous sectors, but also, as point worth stressing upon, around 200 of these names are mid and small cap companies. As a fund house, we already have a higher focus on mid and small cap segment. Our large research team enables us to have in-house research on large number of mid and small cap companies, which helps in superior stock selection. We believe that this, along with our focus on longer term approach to investing, will help in creating alpha over medium term perspective for our prospective investors. We hope for your active participation. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.